All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world. Happy Wednesday, everybody. Today's July 23rd, 2025. And our top story this morning is the Japanese trade deal that President Trump announced yesterday. It is making waves in stocks and in bonds this morning. Let's talk about some of the high-level details. 15% across the board tariffs on Japan. That is down rather significantly from the 25% that they were threatened with. So depending on your position on tariffs, it's a good thing, it's a bad thing. It does mean higher prices for those items. But as far as the nitpicking, the details of the deal, the most important thing is those 15% tariffs is going to include autos. President Trump had put this across the board 25% tariff on cars, and it was kind of a sticking point. He said over and over again that wasn't going to go anywhere, that wasn't on the table. Well, obviously it was on the table, and now it's down from 25 to 15. Automakers, especially Japanese automakers, are rallying on this news. Even Stellantis, the European automaker, is rallying on this news. Stellantis, I guess the idea is maybe since auto tariffs are now on the table in Japan, maybe auto tariffs would be on the table in any hypothetical European trade deal. Also, this deal with the Japanese does put a little bit of additional pressure on the Europeans to get a deal cut. If the Europeans get these 30% tariffs or these 25% auto tariffs and the Japanese are only paying 15%, well, then it would be a price advantage for the Japanese vehicles over the Europeans, which would mean Japanese gain market share against their European counterparts in U.S. markets. So I think this does put a little bit of pressure on the Europeans, who, by the way, there are articles this morning saying they are preparing their own version of 30% tariffs. They're getting ready to retaliate, assuming a deal doesn't get made. It doesn't look very encouraging, the trade talks between the U.S. and the European Union at the moment. Most of the headlines I've seen for the last few days kind of suggest the Europeans are not playing here. Back on Japan, though, interestingly enough, there was no mention of steel tariffs in this deal. Now, steel was a major sticking point for the Japanese, and I suspect this may have something to do with this $550 billion investment fund that is also included in the trade deal. The Japanese have pledged to invest $550 billion in the U.S., and the U.S. is supposedly going to keep 90% of the profits. Now, we've got almost no details about this investment fund. Commerce Secretary Lutnick was out there today basically saying that the United States is going to pick all of the investments, like basically decide where that money is going to go. Now, I suspect that $550 billion, at least some of that is probably going to go towards steel production in the U.S. Remember that Nippon U.S. Steel deal that was finally approved by the Trump administration recently, even though he campaigned against it? I suspect they're going to steer some of that investment funds towards steel production domestically, which is a very big national security concern for the U.S., as well as an economic one. Also, I couldn't help but notice that $550 billion investment fund rather closely resembles the $500 billion price tag associated with Project Stargate. Remember, Masa-san, we were talking about it yesterday, how SoftBank doesn't have $500 billion, so where are they going to get the money to build all these data centers in the United States? I wonder, is some of this money going to go towards data centers? Probably. But you know what? If you're President Trump and you've got total control over a $550 billion Japanese fund, why not invest a couple of billion in, I don't know, DJT tokens or some Mania coin? We're just spitballing here, throwing it out there, thinking outside the box. Basically, we can do whatever we want with the money. So that's the deal with Japan. Now, also interestingly enough, Japan's bond auction did not go well last night. The Japanese bond market, I don't want to say it threw a fit. It's made bigger moves in the last couple of weeks, but it didn't like the results. The demand for the Japanese 40-year bond last night hit its lowest level since 2011. Bond market investors continue to worry about government spending problems, and they're demanding a higher interest rate in exchange for lending money to the government. Watch that Japanese bond market. Watch that gap closing between long-term U.S. and Japanese rates. We're almost 1 year removed from that panic of the yen carry trade unwinding. And if we see those Japanese yields keep rising, that could trigger that again. Also, we got a trade deal with the Philippines yesterday. After months and months of intense negotiations, a great compromise was reached, and tariffs on the Philippines were lowered from 20% all the way down to 19%. That 1% heard around the world. Very big deal for the Philippines. Sarcasm detector out of Cal, perhaps? I don't know. Either way, guys, that one also includes tariffs on autos. The Filipinos had tariffs on U.S. autos. Those are going away, 0% tariffs for the U.S. And by the way, both deals with the Japanese and the U.S. included military spending and includes the Japanese and the Filipinos buying weapons from us and military cooperation. Couldn't help but notice Japan and the Philippines, right in the middle of those two countries, is Taiwan. It seems a little bit of U.S. weapon buying going on both of Taiwan's flanks. You can kind of see where these trade deals are going and what this is leading up to. Now, a little while ago, we mentioned data centers when we were talking about the $550 billion investment fund. Get ready for higher power prices. I've been watching this one all week. The PJM Capacity Auction happened yesterday, and it was not good or very good, depending on your perspective. If you sell power, it was really good for you. $16.1 billion in reliability payments will be charged to electric consumers in the PJM grid, which is the largest U.S. power grid. It's Pennsylvania, New Jersey, Maryland, Illinois, Virginia, parts of the Carolinas. Look, that's $16.1 billion. That is up rather substantially from last year's $14.7 billion capacity auction. And by the way, that $14.7 billion capacity auction from last year, that was a tenfold increase in the prior year. Can you see what's happening to your electric bills? $329.17 per megawatt day will be charged to the consumers for power reliability, up from $269.92. Now, that $269.92 last year, people got so pissed off that their electric bills went up so much last year because of the capacity payments that the PJM grid was slapped with price caps. They said you're not allowed to raise prices beyond a certain threshold this year. And at this auction, the entire PJM grid hit that price cap to the penny. So they maxed out the price for capacity for the whole freaking grid because of chatbots. So they're going to downplay this. They're going to say, oh, we're making investments in our grid stability, and this is going to force power plants to come online. I don't know if you guys noticed, power plants take freaking decades to build in the Northeast United States because Greta's pretty much in charge up here. They're not going to build any new power plants, at least not anytime soon, which means your power prices are going up. But don't worry, just think about what you're getting. A chatbot that tells you to glue your pizza together. Isn't that nice? Poor people's utility bills, poor people who are already broke because the cost of food, fuel, and housing has gone up so much, they are going to be paying more for electric so NVIDIA stock can keep rallying and Microsoft stock can keep rallying. Ladies and gentlemen, the AI bubble cannot pop soon enough. Also, 2020's bingo update. Who had the National Nuclear Security Administration getting hacked? Remember that SharePoint hack that we've been talking about for the last 2 days? And I said, we're probably going to be hearing more about this. This is a pretty big story. Yeah, they got the nuclear stuff. They got the people that manage our nuclear weapons. Whoops. Oh, and don't worry, it was Chinese state actors that did it. Chinese state-backed hackers. Oh, this decade, guys. We're only halfway through it. Also, meme stock mania is continuing this morning. We've got Open Door is giving way to Kohl's and Krispy Kreme. They're the ones getting squeezed now. An analyst at Capital.com thinks she knows why this meme stock craze is going crazy right now, but it seems we're spreading and, well, Kohl's, Krispy Kreme, okay. just pick some arbitrary dying business and squeeze the hell out of it. That seems to be the way of things these days. We got earnings from Texas Instruments. It was a big beat yesterday, but there's worries about tariff pull-in driving those big earnings that were really good because people were trying to buy more stuff before the tariffs hit. Now that the tariffs are here, I guess it's tariff pull out that they're worried about. And the this executive leadership team struck a very negative tone on the conference call yesterday. The market didn't like that. Plus worries about the auto market. You've got Texas Instruments is selling off big time this morning. And your chocolate is going to get more expensive too. Hershey's just announced that they are raising prices of Hershey's chocolate by double-digit percentages due to higher cocoa prices. We kind of saw that one coming. We talked about higher cocoa prices for much of last year. Although they're down substantially from the highs they hit in December, they are still way up versus where they were a decade ago. And that means Halloween probably going to be more expensive on top of your electric bill and everything else. So we got that going for us. Guys, we got a lot to talk about once again this morning. How about we shrink my big melon up ahead and let's see what's going on in markets. By the way, guys, we're going to skip the whole like button and subscribe button thing today. And I just want to point out, I have a comment pinned in the live chat. It has come to my attention that there's people, somebody, some group impersonating mods in our Discord server, and they are attempting to scam people. Just let you guys know, we will never DM you or contact you or email about any investment opportunity or trading service. That is not what we do here. And so if you get a message like that, it is almost certainly from a scammer. This sucks. People are just awful sometimes. Keep your guard up, guys. We see it in the YouTube comments. We see it in the Twitter comments. We see it in Discord. The scammers are everywhere. Stay vigilant, please. Right now, the S&P 500 is higher by 23 points or 0.37% to the upside. We've also got the Dow is up 236 points, a half a point to the upside. Stocks looking pretty good here. It looks like trade deal enthusiasm. The NASDAQ up not quite as much, 25 points or 0.11% in the green. So stocks look to be up about across the board this morning. Slightly stronger dollar as well, 97.5 for the DXY. That's up by 14 basis points or 0.14% higher. Looking over at the bond market, we got a lot of green in the bond market. Remember, though, green in yield is red in price. A little bit of bond selling going on here. The 30-year Treasury, 4.943. That's higher by 4 basis points. The 10-year is at 4.367. That's higher by 3 basis points. The 2-year is at 3.853, higher by 2 points and change. And the 1 month at 4.307, up almost 1 point. We've got a little bit of selling in bonds, a little bit of buying in stocks. Looks to be risk on this morning. Looking over at the commodities board, we got gold is a little bit lower here after a good couple of days. We're down by about $15.60, $3,416 for spot gold. It's about off by about 0.5%. Silver, though, just keeps chugging along. My favorite of the shiny, $39.44. That's up another 16 cents or 0.4% this morning. Just a stone's throw away from $40. I like the shiny. We've got copper is up by 2.2%. Platinum is down by about 1%, still well above $1,400 for platinum, though. Palladium is off by 0.8%, and WTI crude is down by about 1/3%, $65.09 for September WTI oil futures. That's down by about 22 cents. Looking over at Bitcoin, it looked like we were breaking out from this bull flag pattern yesterday, but apparently not. $118,130. That's down about $2,000 from the highs we saw yesterday. We were very briefly back above 120,000 yesterday, but we could not hold that level. Now, let's talk about what is going on. First, in the power grid here. I mentioned this one on X yesterday. AI boom leads to record costs on U.S. grid and a call for new plants. Well, you can call for those new plants, but they will not get here before your electric bill does. Business and households served by the largest U.S. power grid will spend a record $16.1 billion to ensure electricity supplies, a result that prompted immediate calls from utilities and energy groups to build more generation amid the AI frenzy. The payouts to generators and other suppliers topped last year's record $14.7 billion, according to PJM Interconnection, which operates the grid stretching from the Midwest to the Mid-Atlantic. That raises the capacity price per megawatt each day to $329.17 from $269.92. And guys, this does not do it justice because that $329.17, that is the maximum allowable price cap, and the entire region hit that level. They maxed out prices. and that is up from 269.92 last year. That number was a 10x increase in the prices from a year earlier. Can you see what big tech is doing to your utility bills here? But you know what? Just whatever, build more chatbots, buy more stock. Don't worry about what we're doing to, poor people are just going to have to go to bed earlier and turn the lights off and give up the air conditioning. I mean, we've got chatbots to build, folks. Where's your priorities? The AI boom is driving the biggest surge in electric demand in decades, leading to soaring utility bills and disagreement over which power resources are best equipped to satisfy those needs. While the power industry is coalescing around new plants as a way to alleviate potential shortfalls and to make money, such efforts would also risk adding to consumer costs at a time when politicians are sensitive about energy inflation. It literally tells you we are out of generation, said Sean Kelly, a former power trader and CEO of power forecasting firm Amperon Holdings. It's good for traders. It's good for asset owners. It's not good for consumers. And holy crap, I just had an epiphany. You could pretty much describe every policy to come out of Wall Street, Washington, D.C., the Fed, the White House, Congress, the Republicans, the Democrats. It don't matter. No matter what they do, it's good for traders. It's good for asset owners. It's not good for consumers. It's a polite way of saying it hurts the poor. And take a look here, guys. This is a map showing the PJM grid, and it shows the entirety of the PJM grid hit that maximum allowable $329 price cap yesterday. Higher electric bills. Companies like Constellation Energy Group, hey, that's my former stomping ground, up 4.3% on this news. Constellation stock, this is a utility. It's up 42% year to date. Utilities are supposed to be boring investments, bond market alternatives, not freaking meme stocks or shit coins. Why is it up 42%? Look at over the last 5 years, Constellation is up 736% for a public utility. Good God, what are they doing to the power grid? Meanwhile, the main story of the day, Trump strikes a deal with ally Japan, setting tariff rate at 15%. This is the one making big waves in both bonds and stocks this morning. President Donald Trump reached a trade deal with Japan that will likely impose 15% tariffs on imports, including automobiles, from the key American ally, while creating a $550 billion fund to make investments in the U.S. The agreement touted by Trump after he secured breakthroughs in the final 75-minute Oval Office meeting Tuesday with Japanese negotiators spares the nation from a threatened 25% tariff that was set to take effect next week. They had their top people here, and we worked on it long and hard, and it's a great deal for everybody, Trump said at a White House event Tuesday evening. Under the deal, automobiles and parts would be subject to the same 15% rate as Japan's other exports, Prime Minister Shigeru Ishiba said in Tokyo, amid local media reports that he's planning to step down in the wake of the agreement following a poor showing for his party in an election on Sunday. In return, Japan will accept cars and trucks built to U.S. motor vehicle safety standards without subjecting them to additional requirements, a potentially major step to selling more American-built vehicles in the country. The auto sector tariff had been one of the main sticking points in the negotiations. A couple other key points here in this trade deal. The Japanese will buy more U.S. rice. Keep in mind, Japan has had big problems with rice inflation over the last year or so, largely contributing to Prime Minister Ishiba's big defeat in their last election. The Japanese will buy more weapons, which will almost certainly be pointed at China, and they will buy more Boeing planes, so possible some more relief for Boeing stock coming out of this one. And again, that $550 billion investment fund, that's kind of a big question mark here. The fine print has not been written on that yet, but supposedly the U.S. will control where that money goes, and the U.S. will keep 90% of the profits while Japan pays for everything. Sounds like a pretty lousy deal for the Japanese, but that is what the deal is. And, well, the Japanese bond market kind of threw a fit. I don't know if this is what they were upset about. Maybe they didn't like the election results. Either way, the Japanese bond market has investors worried. Why investors are worried about Japan's bond market? This one in Bloomberg this morning. Months of uncharacteristic volatility in Japan's $7.6 trillion bond market has investors who have become accustomed to uneventful trading well and truly spooked. An auction of 40-year Japanese government bonds on July 23rd recorded its weakest demand since 2011 amid concerns over government spending and following news of a U.S.-Japan trade deal. Trouble in the bond market had been brewing in Japan ever since the country's central bank, the BOJ, which owns more than half of the nation's sovereign bonds, started gradually trimming its balance sheet and scaling back its purchases. The problem is that other buyers have not stepped in enough to fill the gap left by the BOJ. In other words, the central bank is the bond market in Japan. There's pretty much nobody else. The trouble erupted in May when poorly received auction of 20-year bonds sent yields soaring. An auction of 40-year bonds on May 28th added to that turbulence. The change in central bank policy has come at a particularly challenging moment as investors scrutinize a rise in government spending around the world and the practice of selling bonds to fund that spending. In other words, investors, bond vigilantes around the world are calling BS on government spending. They're demanding higher interest rates in order to loan it to the government. And, well, if that keeps up, sooner or later, we all know what's going to happen. The central banks are going to spin up the printing presses in order to start buying those bonds and send the interest rates back down. And when that happens, there is just not enough gold in the world for what's coming. Hence the big run in gold and silver. By the way, those Japanese 40-year Treasury yields or 40-year JGB yields, they are up 9 basis points this morning, 3.47%. Let's zoom in a little bit. Now, guys, we had a big blowout in that back in May. Everybody was freaking out over the Japanese bond market. I suspect there was some kind of finance ministry intervention. Then the yield started rising again, and now we're kind of heading back to that level. Big problems here, guys. Keep an eye on that Japanese yen, that yen carry trade. It remains another of many risks to asset prices, and we're not even a year removed from that big August 5th panic last year. We also got a deal with the Philippines. This one maybe not making as much noise, but it's worth mentioning. U.S.-Philippine trade talks yield modest tariff shift after Trump-Marcos meeting. U.S. President Donald Trump announced a 19% tariff rate for goods from the Philippines on Tuesday after what he called a beautiful visit by Philippine President Ferdinand Marcos Jr. to the White House and said U.S. goods would pay 0 tariffs. The new tariff rate is just below the 20% threatened by Trump earlier this month, but still above the 17% rate set in April when Trump announced what he called reciprocal tariff rates for dozens of countries. It matches the 19% rate announced for Indonesia and bests Vietnam's slightly higher rate of 20%. It was a beautiful visit, and we concluded our trade deal whereby the Philippines is going open market with the United States and 0 tariffs. The Philippines will pay a 19% tariff, Trump said, calling Marcos a very good and tough negotiator. Trump said the two Pacific allies, who will celebrate 80 years of diplomatic relations next year, would also work together militarily, but gave no details. And again, guys, the Philippines and Japan, right between the two of them is Taiwan. Military cooperation on both flanks, obviously targeting the Chinese. And, well, the Chinese are targeting us, so I guess why not? This one in Bloomberg this morning, U.S. Nuclear Weapons Agency breached in Microsoft SharePoint hack. Yikes. Headlines don't really get much worse than that other than nuclear detonation somewhere. This is pretty bad. They hacked the freaking nuclear stuff. The U.S. agency responsible for maintaining and designing the nation's cache of nuclear weapons was among those breached by a hack of Microsoft SharePoint document management software, according to a person with knowledge of the matter. No sensitive or classified information is known to have been compromised in the attack on the National Nuclear Security Administration, said the person who naturally wasn't authorized to speak publicly and asked not to be identified. And I just love this statement. No sensitive or classified information is known to have been compromised in the attack. They didn't say no classified information was compromised. They said we don't know if any classified information was compromised. Doesn't that make you feel better? We have no idea what they took or what they did. All we know is they're in there. The semi-autonomous arm of the Energy Department is responsible for producing and dismantling nuclear arms. Other parts of the department were also compromised. The agency deferred questions about the attack to the Energy Department. Microsoft has blamed Chinese state-owned sponsored hackers, state-sponsored hackers for the attacks, which exploited flaws in its commonly used SharePoint document management software in a campaign that has breached governments, businesses, and other organizations around the world. In some instances, the hackers have stolen sign-in credentials, including usernames, passwords, hash codes, and tokens, Bloomberg reported earlier. In addition to the Energy Department, the hackers have broken into systems belonging to national governments in Europe and the Middle East, the U.S. Education Department, Florida's Department of Revenue, and the Rhode Island General Assembly. And okay, it's serious. They got the Rhode Island General Assembly. I mean, okay, governments in the Middle East, the nuclear codes, all that stuff. I'm not so worried about that. But if you go messing with the Rhode Island General Assembly, all right, that's like an act of war right there. Don't mess with Rhode Island. It is a tiny, tiny little state, and we got to watch out for those guys. I mean, you can't even see them when you squint on the map, for crying out loud. All right, what's going on here in meme stocks now? Krispy Kreme joins the meme stock party. Tech and crypto strength may be fueling the wave. An analyst says, gee, you think monetary policy is sufficiently restrictive? I don't know. When Krispy Kreme and Kohl's rallied double digits in one day because people made millions of dollars shorting shitcoins, just maybe we don't really need lower interest rates when that's going on. I'm just throwing it out there. Krispy Kreme has joined Open Door Technologies and Kohl's in the latest meme stock wave as shares of the donut maker skyrocket amid a wild week for the names. Shares of heavily shorted Krispy Kreme were soaring 34% in pre-market trading Wednesday after ending Tuesday's session up almost 27%. Kohl's stock surged as much as 105% on massive trading volume Tuesday before pairing gains. Just a day after Open Door rose more than 120% intraday, lifted by a surge in volume and activity in options contracts. In her note, Sabine Hawthorne from Capital.com said that the resurgence of meme stock trading can be attributed to several factors. First, retail trading forums and social platforms have once again become engines of crowd momentum, she wrote. Second, these stocks are all heavily shorted, setting the stage for violent short squeezes when buying pressure ramps up. Lastly, the analyst highlighted the current market environment where tech stocks are strong and crypto markets are rebounding. This, she says, has encouraged a risk-on mindset, emboldening retail traders to dive into speculative plays. So, look, let's just take a look. Right now, it seems the meme traders have moved on from Open Door. It was down 10% yesterday. It's down another 10% pre-market, although it's still up 177% over the last 5 days. So now that some of them are moving on from Open Door, they're moving into names like Kohl's, up 37% yesterday. Again, at one point yesterday, it was intraday, it was up over 100%. Kohl's is off by a couple of percent this morning pre-market. And of course, Krispy Kreme, the donut maker, ticker symbol DNUT, up 26% yesterday and another 32% this morning. Look, guys, this isn't really price discovery. This is short traders are caught off sides. This is a loophole in market mechanics. There's no underlying strength in any of these companies. All of these companies suck, but their stocks, who knows how high they could go, because short traders got too greedy and they're caught offsides with their pants down, and there's just no telling how high these can go. But we do know how these end eventually. These stories always end in tears because there's no underlying strong business to support these valuations. So typically the people who are organizing all these people in Reddit forums and everything, they're the first ones to sell. They get all the gains, and the last people to pile in tend to lose everything. We've seen this before. We'll probably see it again. Meanwhile, Texas Instruments plunges after the forecast fuels tariff fears. It was actually pretty good earnings from Texas Instruments, but they're not going to last. Texas Instruments, a key chip maker for producers of cars and factory equipment, tumbled in early trading Wednesday after stoking fears that a tariff-fueled surge in demand will be short-lived. Though the company issued a third-quarter forecast that beat most estimates, the outlook was more guarded than some investors had anticipated. The stock fell further during a conference call when executives struggled to win over analysts who said the company's tone had become increasingly negative. During the call, executives said they saw strong orders in the second quarter, with some customers likely adding inventory to guard against the tariff impact. Since then, levels have returned to what's expected for a normal recovery period, they said. Analysts repeatedly asked management about a perceived shift toward a more pessimistic view of demand. The company expressed confidence that all their markets, apart from automotive, are improving. You know, they're saying what we've been saying on this channel. The car market is in really bad shape here. Automotive has not recovered yet, CEO Haviv Ilan said. China delivered a 32% increase in revenue during the second quarter. That, according to Ilan, ran a little hot. leading him to be more cautious about the current period. So that 32% surge in revenue from China, that was people front-running tariffs. That's not going to last. The auto sector is in bad shape. It seems that negative sentiment on the conference call was enough to torpedo Texas Instruments stock. It's down 9.5% ahead of the opening bell here. Actually, the opening bell has rung. Let's refresh this and get an accurate mark. Down almost 11% now, $191.66 here, off by about $23. A lot of volatility in Texas Instruments this morning. And the last one of the day, Hershey's to raise chocolate prices as cocoa costs remain high. Good news, guys. Inflation is under control, right? Higher electric bills, higher chocolate prices, but I'm sure everything's going to be great now the tariffs are here. Hershey has told retailers it will be taking a double-digit price increase on average across its confection portfolio due to a surge in the cost of cocoa. The company spokesperson said on Tuesday, the maker of Reese's Peanut Butter Cups declined to comment on the specifics of the pricing action as discussions with its retail partners are underway. The change is not related to tariffs or trade policies. It reflects the reality of rising ingredient costs, including the unprecedented cost of cocoa. Now, Hershey's had already telegraphed this move, and when you look at this chart, guys, you can see why. The price of cocoa futures, this is going back all the way to like the middle of 2019. You can see they were humming along here, $2,200. I'm guessing that's per ton. All of a sudden, in 2023, they started to rise. In 2024, they went vertical. They peaked at over, what's that, about 13,000, up from 2,500. So, look, a 5-6x increase in cocoa prices, even though they're down substantially from those highs in December. They've fallen almost 40% from those highs, but we're still more than 3 times as high as we were in the years before this run-up. Sooner or later, that's going to result in significant price increases for Hershey. The company is confirming that this morning. Double-digit price increases across the board for them. And I just want to say thank you very much to Robert Feeds the Machine. Thank you, Robert, for supporting the channel. He says, I think I have a Greta Thunberg infestation. Oh, no, you've got Greta's. You better call Orkin, man. They live in my crawl space and crawl out at night to nibble on my houseplants and graffiti my V8 Mustang and whisper, sweet, how dare you's into your ear while you're sleeping. I added that last part for dramatic effect, but I cannot imagine. I don't know. Does Raid make a Greta formula? I don't know. Maybe, you could like sprinkle some productive economic activity around the house. I hear that deters people like Greta. They generally shy away from that kind of thing. Oh, no, I just get arrested for a living. I don't do any productive value add work whatsoever. Oh, good luck with that Greta infestation. My God. Next thing you know, there's fingerprints in your Jell-O when you open up the fridge. Thank you, Robert, for supporting the channel. And Lisa B., thank you for being a melonhead for 17 months. Kohl's cash earned with each share purchased. There we go. Now we're thinking outside the box. That's right. Kohl's cash. Remember they used to mail you free money to spend in their store to get you to come in there. Look, Kohl's, it's going the way of Bed Bath & Beyond, guys. It's a giant company. They're competing with online apparel makers. Tariffs are going to hit apparel really hard. They're already closing stores all across the country. Kohl's has had a couple of really bad quarters in a row. They tend to be like right next to a Bed Bath & Beyond. Bed Bath & Beyond is already gone, so that's limiting the foot traffic that Kohl's is seeing. The Kohl's out here by me, they just closed in the last year. This company may not be around too much longer. It's another one of those companies that's basically becoming a real estate investment trust. The value of the company is going to be determined by the worth of its carcass. How much is the real estate underneath it going to be worth? So, Kohl's cash for each share repurchased. Now we're thinking outside the box, Lisa. That's good. I like that. I just want to say thank you, everybody, for having your coffee with the Melon Heads. Just a reminder, guys, we will never email you about trading opportunities or investment opportunities. That is not what we do here. Be on guard for doppelgangers pretending to be me or the mods. Don't forget that like button and that subscribe button on the way out. And also, thank you so much for the super chats. And thank you to my magnanimous melonheads on Patreon and YouTube for supporting the channel. Links down below, should you feel so inclined. Hi, Mom. Hi, Dad. I love you guys. Everybody, till next time, live small and dream big.